Ever heard this before? We just found the next crypto altcoin that will definitely 100x in the next cycle. So stick around to find out how to change your life forever. If you search YouTube, there are endless predictions all claiming to have figured it out. That's right, you're late. And you better click away from this video right now to catch up on that research, because what we outline for you in the next 10 minutes will probably convince you otherwise. In our opinion, Terrance Michael puts it best in his book, Proof of Money. We have a link in the description where you can buy his full book, but we'll read this part to you. Some cryptocurrency projects like Cardano, Solana, or Ripple can settle payments on their own protocols in seconds. The technology and speed are impressive. However, these projects use their native tokens, not Bitcoin. They aren't moving any money whatsoever. Bitcoin transactions move actual money, not a token without a fixed supply, and not a credit or debit for later settlement. Since there is no issuer or counterparty of Bitcoin, it is 100% owned and controlled by the person who has it, until the next person has it. No one comes between those two parties, especially a company with investors. Bitcoin doesn't solve speed. Speed isn't a critical problem for money. The issue is decentralization and freedom from manipulation by any hierarchy. Bitcoin is about security and stability. It is willing to sacrifice speed for those qualities. But even at a limit of 2,000 transactions per 10-minute block, Bitcoin has no limit to how large a transaction can be. A single transaction can be a user's internal batch of $100 billion if they choose. Users can still transact above Bitcoin's base layer with lightning-fast speeds and unlimited transactions, only to settle on the base layer when it's time to pay the bar tab. Part of the problem is the word cryptocurrency. Bitcoin was unfortunately labeled early on as a cryptocurrency by mainstream media and journalists, but just because they call it that doesn't make it so. Satoshi Nakamoto, the creator of Bitcoin, never once used the word cryptocurrency in his original 8-page white paper. Is Bitcoin cryptographic? Yes. Is it a currency? No, it's money. When Bitcoin rises in market price, users feel confident and start gambling with cryptocurrencies. When Bitcoin declines in price, they sell out of cryptocurrencies and jump into Bitcoin. Every 4 years, we hear about another 24 altcoins, and every 4 years, most of those become dust in a wallet. Over 90% of all altcoins trend to zero within these 4-year timeframes due to Bitcoin's somewhat typical bull and bear cycles. Altcoins serve as currencies for their insular ecosystems. The creators and their investors make overall project decisions, influence the price, sell to fund further development, and make changes with votes that they control. The SEC has defined these cryptocurrencies as securities because, like stocks, which are securities, they begin with the intention of profit. A security is an investment, good or bad. As an investment, it needs to be regulated and treated as such. It isn't money. This is the distinction. A security is a business structure. Stocks and cryptocurrencies are pre-funded by founders and investors who give themselves shares, stocks, or tokens before the public. It's the initial part of the IPO or ICO that defines them as securities. They are businesses that favor their founders and investors, not the public. This is legal and acceptable, but it's not money. If you want to own Ethereum's token, investors should know that 70% of its original supply was given to its original foundation of engineers and coders. You, however, have to pay for the same token. If you want to own Solana, investors should know that it's been shut down 10 times and has had to be rebooted by engineers. The SEC's chairman, Gary Gensler, said in an interview with New York Magazine, "Everything other than Bitcoin, you can find a website, you can find a group of entrepreneurs. They might set up their legal entities in a tax haven offshore. They might have a foundation. They might be lawyered up and try to arbitrage and make it hard, jurisdictional or so forth. Still, at the core, these tokens are securities because there's a group in the middle and the public is anticipating profits based on that group. Bitcoin never had an ICO or advantage of any free coins, even to Satoshi himself. to jumpstart the issuance of Bitcoin into the supply. Satoshi mined about 1 million Bitcoin, but that Bitcoin has never once moved from those wallets. Going back to 2009, Satoshi knew that gaining any initial privilege to Bitcoin would defeat the purpose of Bitcoin. He either threw the keys away or died with them, making the ultimate sacrifice and donation to the network, making Bitcoin even more scarce. Bitcoin is a man-made system released by that man into the world as a system as secure and unbreakable as physics, math, or language. It's now a law of nature, and the laws of nature are the only rules man has never been able to break. He has broken all other laws. All coins need to register with the SEC, but since most of them haven't or can't, they pump and dump on holders from offshore exchanges to get in and out of their Ponzi scheme. Those who are well-funded and attempt to play by the rules get sued by the SEC, settle for hefty profits, and continue to operate until the next lawsuit. The 22,000 plus altcoins that have existed are all securities. Every one of them has hijacked Bitcoin's definition of decentralization. You can't have decentralization if there's a company making decisions or issuing coins. By definition, that makes the network centralized. Had cryptocurrencies never surfaced after Bitcoin, calling Bitcoin a cryptocurrency may have stuck. But for the same reason you wouldn't call a human an animal, even though they may technically be. You wouldn't call Bitcoin a cryptocurrency in comparison with how altcoins operate. Bitcoiners cringe at the word crypto for this reason. There were about 800 cryptocurrencies established in 2014, 5 years after Bitcoin. Of those, 550 are now dead and no longer in circulation. You can't sell or even access those if you still own them. In 2017, this number grew to over 700 dead altcoins, and as of now, over 90% of all altcoins ever in existence are gone or delisted from public access. Altcoins allow those with money and influence to own the vote of their protocol. No one has to prove their work. Like Bitcoin, they only have to put up money to censor and make decisions for the majority. Anyone can buy proof if they put up the stake. This is why most cryptocurrencies operate on proof of stake. It's a simple system where you stake money rather than prove your work. That stake allows the stake to vote for change. Votes don't tie to users, but rather the amount of money staked. Those with enough wealth can halt transactions, reverse transactions, sanction users, freeze funds, print more tokens, kick users off, and much more. Bitcoin operates on a proof-of-work system which ties energy and effort in the real analog world to the digital world. It's not printed out of thin air like fiat. Instead, it's mined through a process like gold. Due to proof of work, Bitcoin is legally defined as a commodity, not a security by the SEC. A commodity is an asset without an issuer. There is no company behind its existence. Complete ownership is proven merely by possession of it. It is legal property without liability on the other side. I should clarify, I don't have a problem with altcoins. I'm in favor of capitalism and entrepreneurship. Let people, startups and investors create and do what they want. Systems, including humans, must fail on their way to learning and discovery. Most hardcore Bitcoiners once started with and traded altcoins. They too had to learn the difference. I have an issue when the public confuses Bitcoin and crypto as one of the same. Newer users get distracted by shiny objects. Bitcoin isn't shiny, it's boring, but money should be boring. It's just a tool. With Bitcoin, you own the internet of tomorrow. You don't have to gamble on altcoins or cryptocurrencies. That only distracts from the importance of Bitcoin and what it provides for 8 billion people. When it comes to people's money, the point of moving toward a more fair and honest system is to have one that no one over another can sway. Altcoins do not solve the fiat problem. They simply replicate and transfer it to their own blockchain. They become their own Federal Reserve. They become their own central bank. It only exacerbates the problem. With Bitcoin, there's no authority, no rulers, no politics, no power structure, no hierarchy, no ranking, no investors, no lawyers, no pitch decks, no seed rounds, no bank debt, no shareholders, no board meetings, no alliances, no influence, no back channels, no strategy, no privacy policy, and no special treatment. That's Bitcoin. Crypto is the opposite of every one of those sentences. Again, Bitcoin is not crypto. In time, Bitcoin will be a universal medium of exchange. Until then, discounting Bitcoin because fewer people currently conduct business in it is a mistake. It's like ignoring a big block of valuable gold because you can't buy a coffee with it. That's not the purpose of gold, and it's not the purpose of Bitcoin. To find out more about the purpose of Bitcoin, consider watching this next video here. Thanks for tuning into our channel. If you learned something, please like this video, subscribe to our channel, and hit the bell icon to be notified about more videos every week.